Welcome back. Now, Ambit has launched a small cap mutual fund for Japanese investor. It's a fund started in Gift City and it's going to pool in Japanese retail money, and they've raised close to about 2,000 crore rupees. To discuss this and more, we have with us Ashok Wadhwa, Group CEO of Ambit, and Sushant Bhansali, CEO of Ambit Asset Management, on the show now. Mr. Bhansali, if I may, start with you first. Give us some details about this Ascension fund. And I'm sure while this idea was conceptualized a while back and it's just coming to fruition now, the timing, right? We've seen and we continue to see relentless FI selling and small caps being battered.
Sure. Thank you for being here with us. It's a great opportunity. I would say that from an investor's perspective, best time to invest is when prices have corrected. So well timed in our view of raising the money just at the right time. And we're getting, I think, many companies which we wanted to invest in our domestic schemes well, but were not able to invest because of high valuations. We'll now get some chances to invest into such names. Regarding the fund, it's a small cap offering for Japanese retail investors in the mutual fund. The fund in Japan is called Daiwa Ambit India Small Cap Stock Fund, which will invest exclusively in the Ambit Ascension Fund in Gift City and investing only in small cap companies. The portfolio will be about 50 odd companies in the small cap space. Small cap as defined in the Indian context.
Right. Okay, and you've raised about 2,000 crore rupees, but you can go up to $1 billion.
Yes. So it's an open-ended fund where this is just the NFO which got closed in late January. And we've got the money on the budget day, and from there on we've started investing in the fund.
We are also joined by Ashok Wadhwa, Group CEO at Ambit. Thank you so much, Mr. Wadhwa, for joining us. First up, what is the kind of mood as far as Japanese investors are concerned? How are they looking at Indian equities? Has there been some pushback, especially given the kind of sell-off that we've seen in the last month or so?
We were a little concerned because just right around the time when we were opening the fund, launching the fund in Tokyo, the markets went through a serious meltdown in India, particularly the small and medium caps. We actually thought that that was an opportune time because with the valuations having got corrected, perhaps a better time to start raising money and making investments than 6 months ago when the valuations were at peak. I have to say that whereas we keep reading and hearing about FPIs and global investors losing some level of interest in India and selling and withdrawing money back to homeland, we found the environment in Japan quite the contrary. Japanese retail continues to believe in the India story. The fact that our partners, Daiwa, were able to do this successfully in a short period of time is testimony to the fact that there is a lot of capital waiting to come to India, particularly as we see this corrective phase through which our markets are going at this point of time. So no, we were very positively surprised by the amount of interest and the fund flows is, as I said earlier, is a testimony to that interest.
Mr. Wadhwa, what is the kind of return that the Japanese investors expect when they put in money, when they put the money in your fund?
Obviously, everybody looks at your track record, and our track record over the last 5 years indicates that we have delivered a 15% plus return in that space of the small cap. My own view is that if you look at Japan and you look at Japanese capital, you look at the amount of liquidity in Japan, you look at the sort of negative to neutral rate of return that Japanese retail has earned over the last many years. India obviously looks to them as a wonderful opportunity. Perhaps what was a bit discouraging in the past was there were some barriers, some perceptions about is it easy to invest in India, is it easy to then divest in India, will India offer us enough liquidity? Over the last 3 years, I think many of these issues have got appropriately addressed. The fact that we have a great political relationship on the two sides, I think provides that extra comfort. And as I said, over the last 3 years, pretty much everybody has been able to monetize, investments without much difficulty. So that ease of doing business and investing in India perhaps also has contributed positively. You're seeing Japanese investors looking at India, Indian markets, and particularly the financial services space with a huge amount of attention at this point in time.
Mr. Bhansali, while these points are taken on board, give us a sense of how exactly you will go about doing the stock selection. You said you were looking to have a portfolio of close to 50 stocks. So which are the sectors you like currently, which are the sectors where you find valuations palatable, and which are the sectors that you will continue to avoid and maybe look at a later stage?
Small-cap investing is quite different from large and mid-cap. So you don't have those traditional banks or IT services companies or large pharma companies to invest in. Small-cap is a lot of sectors. Basic themes, if you ask me, will be more consumption-driven, domestic consumption, as well as of select export manufacturing, as well as some bit of services, very niche plays in services, something in let's say staffing services or manufacturing of capital goods, auto ancillary, pharma, chemicals. So these are preferred sectors. So building on the Indian consumption story, and I think that will roll out well with the recent tax cuts announced in the budgets. So it's a fairly diversified portfolio across at least 13 sectors.
Mr. Wadhwa, you've seen many market and economic cycles over the last many decades. How would you classify what we are going through right now? Where are we currently in the cycle? And talk to us broadly about the FPI selling. Yes, you've seen a lot of considerable interest from Japanese investors, but there is still an exodus of flows from FIIs.
Yeah, I agree with you. I think there is a bit of a dichotomy if you see in the market. Long-term strategic players continue to believe in the India story, continue to believe that India is a wonderful opportunity over a 3, 5, 7-year period. Strategic investors continue to look at India with great amount of interest. And as I said earlier, just the amount of capital that Japanese financial institutions have invested in Indian BFSI space is an example of that. Having said that, we do believe that the market is and shall continue to be range bound and perhaps in the volatile zone over the last few months, over the next few months. Our earnings in the third quarter have not been significant enough to provide validation to the fact that the next and the next and the next quarter will deliver superior results. So I would say that in the short run, range bound and volatile. But I don't think anybody questions the medium to long-term story of India. And therefore, those who are looking at India from a 3 and a 5-year horizon, I would like to believe will continue to invest. Perhaps an opportunity now with the market having corrected over the last 2 months, perhaps an opportunity now for them to relook at India when the valuations are significantly more opportune. As I said, I remain cautiously optimistic about investments in India and the Indian market.
Do you think this year could be a washout, negative returns kind of a year, considering that we've had 3 good years on the trot?
I mean, law of averages would say that this year is bound to be less attractive than the previous 3 years. Whether it will then result in a negative return or certainly return which is not commensurate to what we have seen over the last 3 years, I think it's fair to say that the law of averages will ensure that this year is not as attractive as the previous 3 years. But whether that means it will get into negative zone, I'm not sure I'm willing to bet on that yet. I would like to see the results for the quarter ending March before we start thinking on those lines.
Right. Thank you so much, Mr. Wadhwa. Thank you so much, Mr. Bhansali, for joining us and giving us a sense of the small cap universe as well as the interest from Japanese investors in your upcoming fund. We wish you the best. Let's now take a short break. Up next, Neelkanth Mishra of Axis joins in from the sidelines of the Axis India flagship conference on the other side.